Everybody, welcome back to the YouTube channel. Today we're talking about something a lot of business owners don't realize until it becomes a problem. Your bookkeeping might be getting entered, but that doesn't mean it's actually being reviewed. Tony, is this a big one because many owners think my books are done, so everything must be fine?
I mean, not always, and that's the key difference between a good bookkeeper and a bookkeeper that would just do the work, send you the statements, and call it a day. So a bookkeeper job is not just entering the numbers into the software and call it a day. A proper bookkeeper, usually what we do at Always Bookkeeping is we enter the transactions, make sure all the bank accounts are connected, push the transactions, reconcile them based on the bank statements. So if we don't see the transactions on the bank statements, then basically it didn't happen, even if they pull them in for some reason, and we've seen it happen again. The managers at Always Bookkeeping reviews the statements, looking at all the numbers. Do these numbers make sense? Before we meet with the client to ask questions and see if we can have the reports even better before we send it to them for their records.
All right, good to know. So my first question for you is, what does it mean to actually review the numbers? Before we get to the warning signs that you talked about, what does it actually mean when we say a bookkeeper should be reviewing the numbers?
I mean, reviewing it means that the bookkeeper is not just entering the transactions and call it a day. They have to reconcile it. Does the register balance on your software match with the bank balance? And that means that there are no transactions are laying around that you don't really see on the financial statements. And another thing is, do they look at all the statements, not just the profit and loss? Most business owners only care about the profit and loss and the bottom line of their business, but it's important to look at the balance sheet as well. So that means that does the cash flow make sense? Does your account receivable make sense? Does your account payable make sense? Are the loans being paid off? Are the payroll taxes or the GST being paid off every month? Things like that. So if the loan is $50,000 balance last month, and it's still $50,000 a month later, and a month later, something was going wrong during those months where, the loan has to be paid off every month or something is broken. So a proper review by a manager or a good bookkeeper catch those mistakes when it happened on a monthly basis, rather than waiting for the year end where it should not be a cleanup time if you have a proper bookkeeper instead of fixing it at the year end, and you have to fix it every month when you review it.
Great. Let's dive into the warning signs. What's the first warning sign that your bookkeeper isn't actually reviewing your numbers?
So the first sign is that you only receive reports from your bookkeeper and no explanation, no communication. They email you, here are your reports, and that's it. A lot of business owners are not trained to read the financial statements. They are really good at the job, whatever that may be, but reading balance sheet, reading profits and loss statement are a little bit harder for them. So they need a little bit of guidance. So you should have at least some explanation or comments on the reports, whether you have outstanding transaction you need their help on. Bookkeepers are not mind reader. We look at the bank statements, we look at the transactions. Sometimes we don't know what they are for. So a little guidance from the business owner helps, and the business owner might have things that you as their bookkeeper should know, whether that would be they bought equipment, they pay for subcontractor rather than employee. Things like that need to be communicated. And then another thing would be looking at the profit and loss. So you have to look at each line item. So let's say rent expense is $3,000 every month, and then this month it's only $500. What went wrong there? The account receivable is getting really high. It means that either you're not accepting payments from your clients or on your software, or the clients pay and you haven't put it in your software yet. So things like that need to be communicated. So there are accurate numbers that the business owner can rely on for their business.
Right. So it's not just about reporting on the reports, like giving the reports. It's about interpreting them, really.
That's right. So if the business owner can really understand what the numbers means, then there's a problem that needs to be addressed.
All right. What about the second warning sign?
The second warning sign would be if the same mistake keep happening, it means that the review have not been done from number one warning sign, and the second is communication as well. So you have to keep reviewing your bookkeeping to see if the categorizations are correct. Are the expenses being record correctly? Things like that, like the credit card the credit card are being reconciled. Are they is there just one credit card, or did the business owner get a second credit card? Are the expenses being recorded correctly, as in the loan payments should not be on the profit and loss and it should be on the balance sheet. Things like that should be done by the proper bookkeeper, and the rules should be set up and follow after the mistakes have been rectified.
Good to know. Can you give me one example, Tony, of a repeated mistake that actually affects a business owner's decision?
A really good example is that they recently get a equipment loan. So they bought a piece of equipment, but the bookkeeper keep putting it on the profit and loss statement. It means that the business is having more expenses and less profit. It should be living on the balance sheet so that it will be your asset line, your liability line. So at the bottom line, it will be equity. So that should be on the balance sheet instead of the profit and loss. And then if you're not recording the principal amount versus the interest amount, so the interest expense can be on the profit and loss, so you can leave it there. So the business owner should have the proper statements with the correct categorization so that they make better business decisions when they need it.
That sounds like it can be a huge problem.
It could be a huge problem if the statements are not properly prepared and reviewed.
Wow. A lot of business owners focus mostly on the profit and loss statement, but can you talk about the balance sheet? Why is that important?
So the balance sheet is one of the most ignored report that the business owner, don't really look at it on a monthly basis because they only care about, what their revenue level is, how much they spend each month, and what the take home is. But they don't look at the balance sheet, which we usually call the cash flow statement. So how much money are sitting on your bank accounts. So like we talked before, profit doesn't necessarily mean cash in your bank account. So how much cash is sitting in your checking account, how much is the balance for your credit cards, your line of credit? Are you properly entering your equipment that you buy 6 months ago? Are there new loans? Are there new credit cards? You have to record all those to actually get the correct number for your business equity. The second thing is the liabilities are living in the balance sheet. So are you paying off your GST amount every month? Are you paying off your payroll deductions every month? Are your account receivable being paid going down every month? So a good sign is that every month you should see your account receivable going down, not up. So that means that your clients are not paying you, or whoever is in charge of your account receivable are not recording the payments from your clients properly. And are your payables being paid off every month as well? Things like that you should look at on a monthly basis to see if your business cash flow is healthy or not.
Good to keep in mind. So even if the profit and loss looks fine, there still could actually be major problems.
Yeah. So the question that the business owner should ask is, did I make money? Is living on the profit and loss? How much of that money do I get to actually keep is on the balance sheet?
That's a good rule of thumb. So that brings us to number 4. Should a bookkeeper be asking the business owner any questions?
Yes. And a good bookkeeper should have, more frequent meetings with the business owner to be able to ask questions rather than, just assume that these transactions are for this expense or for this payment or not. So for example, the large payment that going out of the business, was it for supplies and material? Did they pay a subcontractor for a project that they didn't have enough employees to work on? Did they buy a piece of equipment that should be living on a balance sheet that we should record? And if that piece of equipment was paid off cash, or did the money coming in as a loan and you pay for that equipment? So things have to be communicated between the bookkeeper and the business owner. So a good bookkeeper are not mind readers. They have to be, asking questions, and the business owner should be also asking questions if the numbers don't make sense to them.
Great. So what happens when a bookkeeper does guess?
So when they guess, the messy bookkeeping become a problem. So if the communication is not there, and you don't ask questions as a bookkeeper, the business owners don't ask questions because they are afraid of bothering their bookkeeper. The problem are now being hidden away 6 months later or at year end. That means more work for you to do at the year end to clean it up, and more work for your accountant to prepare your year end, just because they don't know what these numbers mean.
What's the fifth sign?
The fifth signs mean that the problems are only discovered at tax time. So what I just have mentioned. So a good clean books should not means that you are going to be doing cleanup at the year end. So you have to be, fixing the problem on a monthly basis, so that it's not being washed away, being forgotten at tax time. So it could be a really quick 2 minutes fix if you communicate with your business owner or your client on a monthly basis, so that at the year end it's nice and clean books from your bookkeeper sent over to your accountant, and the accountant just prepare the year end for you and give you a higher level of recommendations, and you as a business owner can make decisions on a monthly basis from a clean and well recorded books.
So tax season isn't the appropriate time to fix mistakes?
No, definitely not. Tax season should be smooth and stress-free for the business owner, rather than trying to figure out what went wrong 6 months ago.
Great. Don't fix your books at tax season. Fix them before then.
Yes.
Tony, what should a business owner reasonably expect from their bookkeeper on a month-to-month basis?
At the minimum, you as a business owner should expect your accounts to be reconciled. So for your bookkeeping software, are all the bank accounts connected? So that would be your, if you have multiple checking accounts, saving accounts, line of credits, credit cards, they should be reconciled on a monthly basis. And are the transactions recorded properly? Are the bank statements balance matched with the register balance on your software? They should expect communication, at least from your bookkeeper. So they should expect, email summary of the monthly reports. If your bookkeeper have any questions, if you have any questions for them. So your bookkeeper might say your revenue increased this month, but your profit decreased. So did you, subcontractor cost higher? Did your suppliers and material cost more? Or are there hidden transactions that we don't, as your bookkeeper, don't see? The goal is just not compliance. The goal is clarity. So the books should make sense to you and be reliable for you as a business owner to make decisions for your business.
Great. I like that. It's not just compliance, it's clarity.
Yeah. So the business owner should understand their numbers on a monthly basis.
Perfect. So Tony, if someone's watching this video today wondering if their bookkeeper is actually reviewing the numbers properly, what should they do?
They should start by asking, questions. So always ask your questions like, are all the banks being reconciled on a monthly basis, or at least bi-weekly? Were there any unusual changes? Like, did the loan get paid off? Or am I, as a business owner, getting too much money from my business that create cash flow problem? Can you explain my balance sheet? So are my account receivable reasonable? Are there any invoices that are 3 months old? Are we collecting invoices on time? Are there any transactions that you're unsure about that I can help you with? Especially with us in Canada, the e-transfer. Sometimes we just show e-transfer sent Sometimes it's just e-transfer received. Is it you as a business owner sent the business money, or the client send you the money for deposit, or is it going to specific invoice? The e-transfer being sent out, was it for supplies and material? Was it for a subcontractor, or was it for a marketer that you are doing marketing with? What should I pay? The next question is, what should I pay attention to the report this month? Whether that be this line of expenses getting out of control, or you're not spending enough on marketing, things like that. You should be asking your bookkeeper on a monthly basis.
Great. So a business owner doesn't need to know everything, but they should be asking some better questions.
Yeah. So you don't need to become a bookkeeper. That's why you hire your bookkeeper to take care of your books. But you should understand enough and be able to, read the important lines on the financial reports to know whether or not your business is doing fine.
Great. What's the biggest danger if books aren't being reviewed on a regular basis?
So the biggest one is making the wrong business decision because your books are not correct. Wow. So the business owner uses their numbers to decide whether to hire, buy equipment, raise prices, cut expenses, or pay themselves more or less, expand or borrow money because you have cash flow problem, prepare for tax season, things like that. If the numbers are wrong, then the business owner are making the wrong decisions in their business. And another danger is cash flow. They need to be able to know if a big tax bill is coming up so that they prepare for that as well, so that they're not in a hole already in the new fiscal year for the business.
Great. So reviewing the books isn't just about being organized.
No, it's about protecting your business and making the right decision for your business. Without the correct books, you are you're basically driving your vehicle blind.
Wow.
Yeah.
So Tony, can you just quickly, for the viewers at home, review the 5 reasons?
So the 5 signs that your bookkeepers are not doing a proper job per se is sign number 1, your reports are sent with no explanations. Sign number 2, the same mistakes keep happening, even if you already told them what these transactions are for. Sign number 3, your balance sheet is ignored. So they just sent you the profit and loss. You make $10,000 this month, but the cash flow is struggling. So you should be, reviewing all the reports necessary for your business, not just the one. No one asks you any questions. So the bookkeeper just do the books on a monthly basis without any questions. Chances are they're not doing the review. They just, enter transaction, call it a day, send your reports, and that's all. And the last problem is, this last sign is the problems are discovered at tax time. That means that they're not reviewing your books on a monthly basis, and the problems only come out 12 months later.
Wow. So the goal is not to blame anyone. The goal is to give the business owner the tools to make the right decisions. Yeah,
the business owner should be able to rely on the books on a monthly basis. Just because you don't know what could happen next month, you need to make the business decision quick and fast, especially in this day and age where if you need to buy a piece of equipment or a piece of land, you need to be able to rely on your numbers right away instead of waiting for, the books to be cleaned up at tax time or at the fiscal year end to make that decision.
Great. Well, thank you so much, Tony. I learned a lot. And to the viewers at home, if you are questioning whether your books are being reviewed properly, try asking your bookkeeper any of the 5 questions that Tony highlighted. And Tony, if they have any questions and would like some help, can they contact you? Yeah,
you guys can reach out to us at 780-554-8356 to book a free first initial consult, or email us at info@alwaysbookkeeping.ca. We would be more than happy to sit down and answer any questions you may have regarding your business. And with Always Bookkeeping, we review your books on a monthly basis so that you have reliable, clean bookkeeping to make better business decisions.
Wonderful. Thanks again, and we will see you on the next video.
Thank you. Bye.